It is once again time for our weekly market review, and we got a lot to talk about this week. We got Bitcoin and crypto selling off. We got AMC with the naked shorts. We got inflation expectations changing. Of course, we're going to go over the equity markets too to see whether we're bullish or bearish there. We also got a few sectors that we've been tracking that are absolutely taking off right now that you don't want to miss out on. And we're going to talk about a big mistake some Fallible members made that you do not want to make. We got to learn from our mistakes, and it's even better to learn from other people's mistakes so we don't have to pay the money that it costs in the stock market to learn. So a lot of good stuff today. Let's get into it. First up, AMC, the drama continues. And in the latest drama, which I think this was like Thursday or Friday, on CNBC, the reporter, whatever her name is, I forgot, she accidentally verified the fact that there are naked shorts in AMC. So it became a huge meme because of her face after she said it, which she shouldn't have said. Had her producer yelling in her ear, most likely. But what is naked shorting, and why is the AMC ape army or whatever so mad about it? So naked shorting is the illegal practice of short selling shares that have not been determined to exist. So normally when you short sell, you got to borrow a stock or determine it can be borrowed before you can sell it short. Instead of buying the stock, you're borrowing it from the brokerage and then selling it with the idea that, hey, when the stock price drops, I'm going to buy it back and give it back to you. So say you collect $50 when you sell it, you buy it back for $25 and give it back to who you borrowed it from, then what? You just made $25, right? But that stock and those shares actually have to exist. Naked shorting is when the stock does not exist. So basically you get short pressure on a stock that's larger than the tradable shares in the market, and that's illegal. And that's why this was so funny, because they basically admitted it on air, because that's what these funds are doing. Now, if you caught my video from a few days ago, we talked about how to beat Wall Street. And one of the things we talked about is that they always pretty much win in the end if you play their game, because they're able to do illegal stuff like this naked shorting. So I know we all love the idea of facing Wall Street head on in these meme stocks like AMC and busting their short squeezes, right? But the truth is that they are probably playing both sides. So they're causing the short squeeze and also benefiting off of it getting busted. And then they do illegal stuff like naked shorting, like we just said. So in reality, it doesn't make much sense to try to face Wall Street head on in these meme stocks. The answer, as we described in that video, is to play your own game, where Wall Street can't even affect you, because at the end of the day, they have so much money and they have politicians in their pocket. It's a mess trying to actually fight them. So this whole thing right here with the naked shorting, it's not surprising at all. And CNBC is basically there to work for these funds and these companies that come on the show, because otherwise they wouldn't come on the show. Just like sell-side analysts and any research that you get from a brokerage or anywhere. It's all so positive because they're not going to let you review their company if it's not positive. This CNBC that I got on in the background, completely useless. I never spend a second watching CNBC. It's just something to put on my TV in the background of these videos. Now, if we look at the stock, the action that happened on June 2nd kind of looked like a blow off top, if we're looking purely at technicals here. And you can see that's kind of what happened. It blew off, it fell a bit, it's recovering. Now what can happen is that it might be forming a slight triangle here, which basically is just another form of consolidation. And you know what happens after stocks consolidate, right? They either break out higher or lower, and you don't actually know which way it will break out. The only way you get a bit of a hint is if you do the fundamental analysis and you say, hey, this is a great company. Other people recognize that and it has a higher probability of breaking higher. Now that's how it normally works. But in a stock like AMC, you could pretty much throw all that out. This pattern I drew doesn't really mean anything. And that's because some stocks like AMC right here are so sentiment driven, and there's so much crazy stuff happening that there's really no standardized way to play it, at least if you're using the old rules. It's purely sentiment based, which makes it, tougher to trade. Not saying you can't trade it and make a bunch of money, because people have, of course. But if I'm applying the same rules that I apply to every other investment, they're not going to apply here, which is why someone like me, I stay away from it, because it doesn't fit into my system. And I'm not the guy who does one-off trades, because I stay very strict and disciplined in how I'm investing. That's how I stay profitable, because otherwise I get distracted and I start doing stupid things and blowing money left and right. I'm like a recovering alcoholic that can't take just one drink. It's not going to end up well. So I just stay away from stuff like this. But I still make really good money in the stock market. Now, by all means, if you want to, play it. But as we described in that Sunday video, don't play it if you think you're beating Wall Street, because you're not. Just understand what you're actually doing. So as far as where AMC will go from here, well, that's pretty much anyone's guess. And that's what makes it difficult to trade. Now, moving on to crypto, Bitcoin does not look so hot. If you remember last week, I was drawing a little pattern here. I was saying it's consolidating in this rectangle. Bad with my shapes. Need to go back to preschool. But I was talking about how the actual price was landing right here. So there was a support, and you can see the wicks go past it, but it ends up here at the end of the day. Important support level. Well, as I'm recording this video, what's happening? It's breaking that support. This is not a good sign. It actually broke it on the 7th, and now on the 8th, it will have a nice close below it. Like this break right here, it is a decent break, but it's not strong enough to tell you that, hey, it won't rebound back the next day. A few days down down like this though, look out below. And maybe the next support is right here around 30,000 because it's this support right here. But I mean, that's not as strong as this one that was forming. So we got to see what happens. But yes, very bearish for crypto. And on top of that, there was the Miami Bitcoin conference this past weekend, which was just ridiculous. Miami is such a hot spot right now because it became real popular. Everyone from Silicon Valley moved over and it's just a bunch of hype, craziness. And then you throw Bitcoin into the mix, which is why they had it in Miami, I think. And as Alex says in this week's research, it was just not the type of sentiment that you want to see at that Miami conference. And by the way, as always, this research is coming from MacroOps, our global macro research and consulting firm. Alex is our head researcher over there. He does all the hard work and I basically just tell you about it in these videos. Like he was saying, the craziness in Miami is not what you want to see if you're long crypto. And let me just show you what he's talking about. Unfortunately, I can't play the sound right here, but this guy is just yelling, F Elon, we're holding Bitcoin forever. There you go, so excited. What does this remind you of? Maybe that BitConnect guy from way back in the day? It looks so similar. So we talk a lot about sentiment on this channel and analyzing it to see where prices are going in different markets. And you saw in that Miami Bitcoin conference, well, sentiment is reaching euphoria. And that's not what you want to see if you're long crypto. Because when people are way too bullish, that's actually a bearish sign for asset prices. And the opposite is true too. When people are super bearish, that's actually a bullish sign. So Alex put this good quote at the top of this paper from John Percival in The Way of the Dollar. He said, bullishness is born as hope in the midst of despair. Hope swells to confidence and confidence swells to euphoria. And the process contains the seed of its own destruction and the birth of its opposite, fear. Fear is nurtured by falling prices and the two feed on themselves until they swell to despair. And so the cycle is completed and ready to begin again with the birth of hope. This is both the way things are and the way they have to be. So it's just a cycle over and over again. And right now, again, we're in euphoria with Bitcoin, at least if you looked at what was going on at that conference. So Alex said we formed an OII breakout wedge pattern on the weekly and daily charts. The technicals do not look good, and his bet is that we see BTC eventually revisit the 20,000 price level. So my 30,000 call, that's more short term. But like I said, it's pretty much look out below from here. So we could go all the way down to 20, which would be down here, and people would not be happy. That's prices from more than 6 months ago. But that seems to be what we're facing here. So this market might break down right away, or it might rebound first before rolling over again. I mean, if we're looking at it right here today, it does look like it is breaking down immediately. But we know that markets don't go straight down. But either way, this type of sentiment needs to be reset for a more durable advance in the future. Because we're still long-term bullish on Bitcoin, but yeah, there's going to be a major correction here. So get ready to hodl, I guess. Moving on to inflation. If you're worried about that, we're likely nearing a local peak in inflation surprises within the next 2 to 3 months. So the expanded unemployment benefits are rolling off by mid-September, and supply bottlenecks are getting worked through. So we should see a positive labor supply shock as we head into the fall. Now, we talked about this in previous videos, how people are not working. Every restaurant is very short-staffed, and that's because they have expanded unemployment benefits. You don't need to work. Is that good or bad? Well, I asked you guys to comment in the comments in the last video, and you said, why would anyone work when you get treated like garbage and you get paid like garbage? Of course you're going to stay at home. And I don't disagree. You can't expect to pay cheap prices and then expect people to work. It's like when you think about Amazon, the free delivery, the 1 hour delivery, and you're paying cheap prices, but the guy's still getting to you. How much is that guy getting paid? How much are the warehouse workers getting paid? Or if you go into the service industry at these restaurants, how much do they get paid? So you can't expect people to work if they're not getting paid much and you get the benefits. But if these are rolling off, then yeah, you're going to be forced to go back to work. Another good thing is that the supply bottlenecks are getting worked through, which does that mean I'll get a PlayStation 5 soon? Because I still don't have it. It's still very sad. So instead, I'm sitting here playing remakes of PlayStation 2 games. I've been playing this one game Yakuza so much that my hair is becoming like this main guy Kiryu. All I need now is the white suit. But anyway, we should see a positive labor supply shock as we head into the fall, meaning a lot more people are going to come back to work, and that should dampen the inflation because it won't be such a tight labor market. Now let's move on to a few industries that we are very bullish on. One of them is nuclear energy, which you guys always make fun of me because I mispronounce as nuclear, or I don't even know. Am I even saying it right now? Nuclear? That's how Bill Gates would say it, nuclear. But we are big bulls on it as a leading baseload renewable energy source. And we strongly believe that small modular reactors will become industry game changers in the coming future. So here's a few charts about China's demand for energy. Nuclear is still small, so it has a lot of room to grow. So one of the ways we're playing that is through Chemical Corp, CCJ. You can see here the 13-year bear market is finally over. Yeah, that's a long bear market. And the new bull cycle is well underway. It is popping. So it seems like it is finally the time to be investing in nuclear. And CCJ is one of the good opportunities to do that. Another big trend we track is demographics, and that leads to housing. So here's an interesting housing demographic chart from FundStart. It shows the size of the millennial wave, which will be going strong and steady until 2026. And you guys know how crazy the housing market is right now. There's just not enough supply. I did a video about this on AK News, where you got to offer like $40,000 over asking and your firstborn child just to get a house. It's ridiculous, but it will continue for a while, especially with this millennial wave going into 2026, as we said. So a small cap housing play that we're looking at is Select Interior Concepts, SIC. So this company installs and distributes interior building products for residential interior design here in the US. Company grew revenues at 25% in 2019 pre-COVID, and the stock trades at a 7x enterprise value over EBITDA. So insiders have been gobbling up shares over the last year, and it's got a decent chart here. We're going to keep digging into it, so I'll give you an update in the next videos. Now, let's look at the equity markets as a whole. What's going on? Well, it looks like everything is coiling and ready to run higher. You can see the New York Stock Exchange Composite Index, the NYA, closed at an all-time high last week. And those highs are being confirmed by an upward marching ADL. And an ADL is an advanced decline line, which shows you how many stocks are advancing versus how many are declining in the total index. And you want this line to be strong because you want a bunch of stocks moving together higher. You don't want just a few dragging the market higher because, that's going to fall over. But if all the stocks are moving together, that's a much stronger bull market. So you could use this ADL line with the price action in the market to tell you how strong this move actually is. So this, because they're confirming each other, strong move. And you can see here that the major US indices have been coiling and building a springboard. So the NYA is likely leading the way, and the odds favor breakouts to the upside soon. So you can see it in the Dow Jones, the NASDAQ, everything's coiling. The Russell, the S&P, ready to move higher. The NASDAQ in particular had its short-term breath turn up last week, which is again a bullish sign. So further positive follow through in the coming days would give a decent breadth thrust confirmation of the path of least resistance, which is again up. So you can see here, so far so good. We want to see this price keep going up. And this is where I want to talk about the mistake that some of our Fallible members have made. And you guys know our Fallible system, right? It's a momentum system that takes all the stocks in the NASDAQ, and we use our TSI scanner and algorithm to rank them by their momentum. So what we do is each month we rotate into these top 5 highest momentum stocks based off this TSI indicator right here. Since you see it spits out a nice little number so we could rank everything. And the idea is that we buy the highest momentum stocks because they move highest the fastest, and then we sell the ones that are falling, the ones that do not have the best momentum based off this reading. So you stay in the stocks that are moving highest the fastest, and that's how you make money. You don't have any dead money. The money's always moving higher, hopefully. Now, this is the system that I use and a bunch of our Fallible members use. It's all automated. It's great. It takes like 15 minutes a month. But even with the system that is so easy and so profitable, I could show you right here. This is our equity line, this blue one right here versus the NASDAQ itself. We're absolutely crushing it. And we do it every year, even when the system is so easy to use. Wasn't easy to build. It took a team with many, many years of experience, but that's how it became easy to use. It's simplicity on the other side of complexity, if you know what that means. But even when it is so easy, what's not easy is what happens in the market naturally, which are cycles. So right now our system is down. Not down as in it's not working, but I'm saying we're in a drawdown period. And while we're in this drawdown period, which I tell you happens in every single strategy, regardless of what the strategy is, nothing wins constantly 100% of the time. That's just not real. But during the drawdown, that's where the psychology comes into play. And that's where you got to control your emotions and stick to your system. In this case, we're using the Fallible system as an example, but really whatever strategy or system you're using, the idea is the same. You got to stick with it. And it can absolutely become psychologically tough because no one likes seeing themselves lose money, of course. So whenever our Fallible members come into this system, we hook them up with our psychology masterclass because it is so important to get your psychology in check. And in that masterclass, we go through this system and cycles in the market and how to deal with them. But even so, still tough. So what happened during this drawdown period is that a lot of people stopped using the Fallible system. And I try to refer them back to the course and I try to explain, drawdowns are natural. This isn't even a bad drawdown. But, people are going to do what they want to do at the end of the day. And the saddest part, and this has always happened regardless if it's this system or anything else, even in buy and hold this happens. It's right after you decide to stop using the system is when the system recovers, which is why it's so painful. And I'm not saying the system is painful, I'm saying investing in general. And how many times has this happened to you where something is shooting higher and you take profits and then it shoots even higher without you? Or you have your risk control in place and it hits your stop. So you sell, and as soon as you sell, the thing recovers. Why does that happen? Because Mr. Market likes to cause you pain. That's why, again, all of investing goes back to psychology. So sure enough, as people started dropping off, I'm like, yeah, the system is about to turn around. And our latest rotation was a few days ago, right? June 1st. Well, we got into mRNA and look, it just took off and we already took profits in it. Super quick trade, already making money. We got into a few other stocks that are heading higher too. And as we just showed you in the research, a lot of these indices are coiled and ready to shoot higher, NASDAQ included. So what normally happens during these times is that you make back all your losses and even more, and you end up pretty good for the year. But you never know how you're going to end at the end of the year, because throughout the year it's going to go up and down. So you got to have that mental fortitude to stay in the game and stick to the system, especially when you have a good system like the Fallible one that has that edge that has worked year after year. Momentum is not going away. That's why it pays to think long-term in investing. Don't think about just this next month or just this next year. Think 5 years down the line, 10 years down the line. Are you compounding your wealth? But anyway, it is a great time to start using our system. And we got this free training right here, which I'll put a link to in this video and down below in the description and comments, that will teach you exactly what we're doing so you could do it too. Again, it's a great time to start if you haven't already. I'm going to put a link to that training right here. This is the same system that I myself and all our Fallible members use. So if you want to use it too, just click this link and I will see you in that training.